What's good? It is Sam here, and today I have an awesome video where I show you my thought process in considering investments, right? So to understand how I think about investing and some of the things that I do to make sure the numbers work, right? And where they come from, because I think that this data that I'm about to show you, there's not enough people doing things like this. They're like, oh yeah, you can just analyze a property or figure it out, right? But once you go through it and you can see somebody doing it, I think that's tremendously valuable, or at least it would be for me. So that is what I wanted to share with you today. And if this is your first time here, what's good? My name is Sam, and for those of you who are returning, it's good to freaking see you. Let's get started. So I'm putting it out there, and I don't think I've put it in any videos yet, but I would like to get 10 units before the end of 2020. So how do you get 10 units before the end of 2020? By starting the process, right? You just need to take action every single day. So I want to show you like what I'm fucking looking at, right? Because I need to do something to move forward. Otherwise, how am I going to get there? So once you start doing something a bunch of times, you can understand what is a good like deal or not, right? Like when you go to the gym and you have a workout, you can tell if it was a good workout or not. And the same thing happens with investments. If you look at investments enough, you start understanding like, oh, that's actually a pretty good deal, right? And you start understanding some things. So that's the intention of doing more things like this. Anyways, let's get into it. So this property right here for $450,000, it's 8 units and they're all 3 units. So we have all 8 units are 3 bedrooms, which is fucking huge. So as you can see, it's outdated. So there's opportunity right here, which I'm going to get into as I get into the actual spreadsheet. But that's basically just what it looks like. There's no numbers. So I checked on LoopNet, which is another site, to see if there was any numbers on there, and I didn't find any over there. But I wanted to still take a look at it based on just my numbers, right? Because if somebody had their numbers, I would use actuals. But at this point, I don't have actuals. Just so you're aware, like if you're doing commercial property, you can get the actual data, like bank statements, all that kind of stuff to analyze. But we don't have any of that, so we're just going to go off of the spreadsheet that I built, right? Okay, so what I put together here is pretty plain or whatever, but we've got the 8 units here in the center. That's what we're going to kind of work off of from that point. So what we have is this is 1,044. Now, where does that number come from in an average rent? Well, if you go over to rentometer.com, excuse me, they have a pro account, but I don't have a pro account. If anybody wants to get me a pro account, that would be cool. But you punch in the address, as in this address right here, up at the top of Zillow. You do it on Rentometer, and then you look up 3 bedroom and you press analyze. So what we have here is within 1 mile radius of this property, there's been 26 different results with an average rent of $10.50. So when I did this analysis the other day, it was actually lower rent. So that is kind of interesting to see that data. That's going to change everything a little bit, and this will be fun, right? Because I just updated it. But we can see the average rent is $10.50. Okay. And we get to actually take a look at the little map here. We can see that right down the street, it is very close to the average, right? There's some 1,100, 1,200 in that area. So let's go back over here. And what I like to do to start, right, the analysis, right, you have to know if it's going to make money. That's the point of the fucking investment, right? In my playbook, you could have, a different objective. Like most people invest in leisure, which then they wonder why they don't have any fucking money because they invest in leisure and like things. I just don't like investing in those things. I like investing in things that give me shit. So that is my objective. And I have the average rent, but right above the average rent, I have a discount factor. So what is the discount factor and why do we use it? Well, the discount factor is applied to the gross monthly rents. Gross is just top of the line. So if you look at this, 840 is just, oh, this is a good song. 840 is the average rent minus the 20%, right? So that gives us $840 per room. And by the way, I did not factor in vacancy in this number for a couple of reasons, but I'm putting together a team, and if you guys want to see more about the team I'm putting together and how I'm structuring everything, let me know down below in the comments. Use the hashtag STOLE, and I can actually get to your comment at the end of the next video, which we're going to do at the end of this video. So just put hashtag STOLE in there. But anyways, what we do is I think that if you are just on top of your shit, when somebody's going to be moving out, you have everything in place so that you can get a turn very quickly. Now I wouldn't bet on that. There was actually a mislapse for me to like not put it in here, but you get the idea, and this is why I'm doing this, right? To understand these other factors, to know if it makes sense, right? You gotta know if you're part of the money that you fucking spend your time on. The only thing that doesn't have a price on it is your time, right? You spend your time doing shit to get some money, and now you want to know if it's going to work for you. So I want to make sure it's conservative because I want it to definitely work. So we get the average. We're 20% less than the average for whatever reason, right? And that gives us a gross rental income on a monthly basis of $67.20. Now let's go over here to the left and take a look at the monthly costs. The stuff up here I'll get into in a second, but we're going to look at the breakdown for the costs right here. What we have is $5,600 roughly. The mortgage. So all these factors, let's say Zillow, they just came from Zillow. They came from like the Zillow calculator. The interest rate I increased to make it more conservative. The property taxes I increased to make it more conservative. The homeowner's insurance I increased to make it more conservative. And I actually added HOA dues, and there's not any HOA dues, of just $50, just to make the numbers even more conservative, right? And that's where these data points in light gray come from, right on the other sheet. Now, the financing is going to be an interesting area that I'm going to have to figure out. So I don't know how a deal like this could be structured yet, but I know just doing this type of thing more often is going to allow me to learn a lot faster and understand that as time goes on. Some of the other factors that I don't have highlighted here are maintenance, which I factored in about $75 per unit per month. $600 a month is, in my opinion, a pretty decent amount to set aside. In 10 months, you have $6,000, which covers, you know, even if you pay somebody to come in and do it, you can do like a whole apartment for like $6,000. So, I mean, to a certain degree, you can do a whole apartment for that. So, or replace like a lot of things. So I'm not sure how long we'll keep it there or how accurate that would be. I'd like to know your thoughts down below. I was going to do 100, but that just seemed really, 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 really conservative. Property manager, this is just 10% of gross rents. I think that I can get well, I'll talk about that later, but starting a property management company just as a way to shift the things around a little bit. But then we do have snow removal and utilities, which I'm not even sure if there's any common lighting on this, which means that like the tenants pay for everything, but the landlord pays for the common lighting. Say, think of like a parking lot, right? The landlord would pay for that. So I have those numbers. I have no idea if there is any common lighting, or if there is common lighting, if 200 is accurate or not. I have no idea on that number there. But all those aggregated together come up to be about $5,600. So I'm going to jump across the spreadsheet here for a second, and we're going to look at the cash flow. So on a monthly basis, we should be getting about $1,100 in cash flow, which is right here on a monthly basis, after all of this is taken care of, right? And we could just factor in a percentage off. So say if I wanted to factor in vacancy, right, and say that we would stay at 95. So say if I just put in 63.84 here, this is what the numbers would look like, right? They would be less, assuming that I factored in a 95% vacancy factor, right? So that will be vacant for like 2 months a year in one of them or something like that. And that comes out to be, or like less, on average, whatever it comes out to be. The $3,000 to $4,000, I think it is. So $800 in cash flow every single month, $10,000 on an annual basis in terms of cash flow. But I'm just going to go back over here how this was, and we see that the return on the cash, which is over here, I'm factoring $2,000 a month or $2,000 for initial reno budget per unit. The way that I would structure something like this is a little bit, it's just different. Like, you got to make the numbers work to understand what's going on, right? So I would partner with somebody who would do this, and you can do a lot of work with $2,000, believe it or not. Or at least the way that I'm going to be structuring it. The cash to buy the property is 50 grand. That I have no idea if that is even slightly accurate, but the total cash outlay would be $66,000. I think I also need to add in an eviction, a dollar amount too. So something like 2 grand for like a couple of evictions or something, just in case on the initial cash outlay as we transition. The previous owner may have just put people into the property without actually any like thought in terms of if they were going to pay in the long term. He just wanted to get somebody in there so that he could sell the property. So the underwriting standards could have been very low. So you figure at least 1 or 2 or several fucking evictions, depend on like the sense that you get from like looking at the numbers and talking to these people. And that would be like the next step in the process. But before we do that, one of the interesting ways to do analysis is you look at ex ante versus ex post. So ex ante is like before the fact, ex post is after the fact. So what I did to do that, and I did this on cap rates and whatnot, but I did a 20% premium. So you saw how the apartments looked, right? This is how they look. And imagine them looking super nice and modern on the inside, instead of having these cabinets with these old things on there, going through and either painting them or putting a new countertops in and just making it look nice. And making those investments so that we get 20% premium on the average monthly rents. And that comes out to be $1,260, right? And this is the 24 to 48 month kind of idea. Maybe it takes 60 months. I have no idea. But I think within 24 months, a decent number of these could be converted over to higher rents. When I looked into like how much rents are if I look on like Craigslist and apartments.com. So I think we can get there. It just might take a little bit of time. If it takes time, and also rents tend to go up over time, so that would also be in our favor. But a 20% premium, right? So when I come over here and I look at like adding that extra premium right here, which is in $40,000. So this is what this basically is just the incremental income from this, which is $40,000. And we're going to say that that drops to the bottom line, which is NOI, because once you make the investments, your costs don't really go up. Your property manager is going to stay the same. Like, depending on how you do renovations, maybe like your costs, like your utilities, could actually go down or something. You know what I mean? So what I have here is, let's see, and please somebody correct me if this is incorrect, but NOI is going to be everything minus, in terms of the monthly costs, your gross. Where is it? I think I might have calculated this wrong. So let's see. We'll do this live right now. So it's your gross rents minus your costs, but we're going to add back in those two, because those two come after NOI. Why did that? Oh. So we've got gross rents minus gross costs, but we're going to add back in principal and interest and the tax portion, because those are going to be after NOI. And what ends up happening, right, is, so this is how NOI is basically like how you trade commercial real estate. So the NOI would be like $55,000. It's basically the profit before the cost of debt. And if you add in what we would have got from it at an 8% cap rate, it would be $1.2 million. So even if you took a high cap rate, say what it's currently listed for, which is a 13 cap rate, I think it's 13.4 actually, 13.4 cap rate. That's $717,000. Remember, we're getting, if we got the property, we would get 450 plus say $70,000 into the property. So we would take this minus that, and we're left with 200 grand. Say we can pull 100 of that out through a refinance. We have another $100,000 to dump into the next deal. So this is what I'm talking about in terms of just trying to understand these numbers, like doing one of these a week to understand some of the pitfalls and putting it out there to you guys, because there's the collective of anybody who watches this video. This is way more understanding or sight around the world than my experience. It's just different, right? So I want to put this out there to let other people see what I'm doing, because I think it will be valuable for that segment, but also so that I could hear feedback on thoughts like, what did I miss? And I'd love to hear your comments down below. If you use the hashtag STOLT, it is easier for me to find the comments and then respond to them like I'm going to do at the end of this video. We've got a question from Christian, or here's just a comment here in regards to the Narrow Labs SARMs order that came in. And he said he's looking forward to the next research vlog where we cover some of the SARMs. If you don't know what a SARM is, it's a selective androgen receptor modulator. Basically, if you think of like a steroid as like affecting every single thing in your body, a SARM only affects like one thing in your body. So that's why it's a selective. It's called a selective androgen receptor modulator, because it's selective in the tissue that it binds to into the body, bone and muscle specifically, with most of them. We have another comment on that same video from Damo. So thank you, brother. Appreciate that. S23 feels super depressed, like insane. The results were fucking incredible, though. It was from the test shutdown, and I know you're on TO2, so I think you should be all good, hopefully. Bless you, bro. Good dude and good info as always. Well, thank you for that. I appreciate it. Oh, and MKSX is like shit. Makes me feel like I'm eating again. By the way, okay. So long comment. Awesome. Thank you so much. But S23 is a SARM that selectively targets the muscle tissue to help you with certain things. And by the way, you shouldn't do any of the things that I'm talking about in these videos. It's just for strictly entertainment and research purposes. But because these are for research compounds, they're the way the law works. If you guys want to see a whole video on that, let me know. But S23 helps with retention of muscle or putting on muscle, and it gives you almost like a very dry, hard type of a look. Then again, if you're like 18% body fat or 25% body fat, you probably see strength gains. You're not going to necessarily, maybe not, I would think, notice much of the hardness. So when I'm referencing these things, this is like personal research on what I've noticed for myself, right? Where you just feel a little bit fuller and a little bit harder in terms of the muscle insertions and that kind of thing, from going from one muscle to the next muscle, which is kind of interesting. And as he references, I am on a TRT base, which is a testosterone replacement therapy, of like 200 milligrams per week. So S23, I think it was actually developed for male contraceptive, I think it was, or it's under research for that, because it does shut down your natural testosterone, because it binds to the androgen receptor in your body so strongly that the testosterone can't bind to it. So your body's like, oh, hey, all the androgen receptors are fucking covered up. We don't need to make any more testosterone. So your testosterone drops, where I have exogenous testosterone. So that I won't have the same effect from like a mood or not feeling great while I'm using that. Anyways, I think this video has gone long enough. If you guys have any questions, don't forget to use the hashtag Stolt down below. Jump over to Instagram and say what's good. Or TikTok. TikTok is blowing up. That is the new hotness. So video coming up on TikTok soon, actually.